Dear viewers, I'm Shrikant Chauhan, associated with Kotak Securities, is introducing a new stock series for you. Today is the first part of this series. I know you have curiosity about the stock market, but you also need curiosity about the stock, about the company, about the investment in which you are going to invest heavily. Where can you invest? Which company can you invest? And what is the risk element? To know all this, today I have brought before you Mr. Jatin Damania. Mr. Jatin is a fundamental research analyst with Kotak Securities. He has been analyzing the metal sector for the last 10 years, and his favorite stock is APL Apollo, on which he will guide you today. Thank you, and over to Jatin.
Thank you, Srikant. Uh, I, on behalf of Kotak Securities, once again welcome all of you to remove and thank you all of you to remove your precious time and join us to listen to our various stock ideas. I'll start with APL Apollo Tubes. Before that, let me share a presentation. So we are bullish on APL Apollo Tubes. We have a target price of 2060. Well, we believe APL Apollo is the largest player in the structural steel space with a primary focus on the pipe business. In addition, company has a pan-India footprint with a manufacturing facility across 11 different locations, wide product baskets with almost over 1,500 SKUs. Strong distribution network supports the volume growth. Company is one of the pioneer in adapting the latest technologies with innovative product offerings. Besides the technology offering, company has seen a sharp increase in the value-added products by acquiring a smaller companies like Steel Lakshmi Udyog, Sankara Steel, or for that matter, Apollo Tricot. So this increase in share of value-added product and economy of scale has supported the company to report an improvement in operating performance, which is EBITDA per ton. Besides this, the strong balance sheet, lean working capital structure also help the company to sustain the and sail through the difficult times. We expect the stock to trade at a premium to its historical valuation. Now let us take these arguments one by one. The company focus area is more on the structural, where we have seen the changes has happened from FY13 to FY19. If you look, the traditional business has gone down from 60% to 45%. On the other hand, the structural business has moved up from 40 to 55%. This indicates that the company has also increased their capacities by almost 5 times in last one decade. That's from 490,000 tons in FY11 to almost 2.6 million ton. Company's capacity is more than 2x to its nearest competitor. If you look into the screen, definitely the company's capacity stands at 2.6 million ton. After which we have a various companies like Tata Steel, Surya Rosni, Maharashtra Seamless, Ratnamani, Rama Steel, and many other small companies whose capacity is not greater than 1 million ton also. As per management, the industry size of steel tubes and pipes in India is 7 million ton. The domestic market size of the industry is rupees 350 to 400 million and is expected to grow in line with the steel industry. Large portion of the industry is served by unorganized player, but the same is steadily shifting in the favor of organized player. And so is the case was with APL Apollo, who has increased his market share almost double to almost 50% by end of FY21. We believe that the company is expected to benefit from India's 10% demand cargo in the structured tubes. Now, if you look at both these charts, indicate the global structured steel tube market expansion and Indian structured steel tube market expansion. Any expansion, any incremental demand, we believe APL Apollo Tubes is just have a strong presence and will be able to capture an incremental demand coming in the market, given its economy of scale as compared to the other manufacturers in the country. Second, the company has a pan-India footprint with a product basket of almost 4 to 5 times to its nearest competitors. Company has a strong distribution network, whereas dealer network of almost over 800. And the company market share currently stands at 50% in the structure sale. The company is changing its selling strategy and focusing on smaller dealer who have potential to push volume. This has helped the company to support a volume growth. We expect volume to grow at 17% CAGR in the next 2 years, which is FY21 to 23. Now, the higher volume is expected to come from the value-added product, which is their DFT technologies, and the Raipur facility, which is targeted under-penetrated in East and Central India market. Secondly, Apollo Tricot is also ramping up well, which will also likely to support the overall volume growth. The company garners 5 to 6% of its revenue from the export market, which is expected to increase to 15 to 17% by end of FY22. This is also likely to support with a higher share of value-added products, economy of scale, which is expected to support EBITDA per ton. If you look the galvanizing business, Tricot business, the share of it's been increasing slowly and steadily. Tricot was not there in FY 16, 17, 18, 19. Company has acquired in FY 20, and we are seeing a significant improvement in the Tricot business. And as a result, with the improvement in the value-added products, the EBITDA per ton has shown a sharp improvement, which was in the range of average range of 3,400 has gone high to 6,800 rupees in the last quarter. Along with the improvement in the operating efficiencies, we have seen the working capital also improve, and the leverage is also at the comfortable level. In the last 7 8 years, we have seen the sharp improvement in the working capital cycle from 67 days in FY14 to 5 days in FY21. And we believe that improvement in operating efficiencies and leveraging the dealer network will help the company to improve working capital further. If you look on the valuation multiple, the stocks, yes, it's trading at a higher multiple, but we expect the stock to trade at a premium both on the price to earning, which is on the EPS basis, as well as on the EV by EBITDA, which is enterprise value by earnings before interest, tax, depreciation, and amortization. As we believe the economy of scale, higher share of value-added product will help the company to trade and garner a premium as compared to the other players in the market. So these are the few reasons why we like APL Apollo Tubes and we are bullish on the stock. There is a one trigger in near-term trigger that the company is expected to give a bonus, and the ex date for same is 16 September. The bonus is in the ratio of 1:1, which will also help the company to increase the liquidity in the market. We continue to maintain our positive view and the bullish stance on the stock with a fair value of 2060. Along with APL Apollo Tubes, we are also focusing on various other stocks. Idea is Larsen and Toubro, Tech Mahindra, and Escorts. Now I call upon my colleague Pankaj to share his view on Larsen and Toubro. Pankaj, please.
Thank you, Jatin. Thanks for sharing your views on the interesting stock idea, APL Apollo. Now I'll take you through L&T, the stock on which we have been bullish for quite long time, and we believe that the stock can continue to do well in next 2 to 3 years. We have a price target of 2050 on L&T, and we see an upside potential of another 23% from current levels. We believe that L&T is a long-term play, and it is a strong player in engineering and construction space. It has a wide presence across geographies in domestic and the international market. It has a capability to do large complex projects, be it airport, high-speed train, and large building projects, and it is a direct play on capex cycle revival. L&T has outperformed its peers and has grown its order book by 2.5 times in last 10 years. So now we think that it's time for the stock to outperform its peers. So among the large companies, L&T is the only one which is growing its order backlog in the past 2 years, that is in FY20 and FY21, and we believe that the trend can continue in FY22 as well. L&T has a comfortable order book of 3.2 lakh crore. This gives a strong revenue growth visibility for next 2 to 3 years, and we believe that the L&T is a beneficiary from government's impetus on infrastructure, as L&T is having 75% of its order book from infra space. L&T has reported robust order inflows in FY21, that was 1.75 lakh crore. Despite a muted start in Q1, we believe that the next 9 months is quite strong for L&T in terms of order inflows, as the company has deal pipeline of another 9 lakh crore. And at the success rate of 15%, the order backlog and order inflows can grow at double digit, and this gives revenue growth visibility beyond FY23. Even in terms of margins, the company has reported decent margin in the Q1, and we believe that the margin trend can continue in FY22, the company has maintained its guidance to maintain margin of FY21 in FY22 as well, despite raw material price headwinds, because its large part of order is protected against price escalation clause. L&T has guided for a double-digit revenue growth and order inflows, and we believe that that company can achieve its guidance. We expect a 17% CAGR in its core revenue and 27% CAGR in its core earnings in FY21 to 24. The stock is trading at around 15 times on a forward basis in terms of core business, and this is at a discount to its large cap capital goods players, and even at a very thin premium over its small cap peers. So we have valued the stock on sum of the parts basis, where we have valued the core business at 17 times, and we arrive at a target price of 2050. So we have buy recommendation on L&T, and we see it as a wealth creating stock in next 2 to 3 years. So that's it from my side. Over to Sumit. Sumit, please.
Thank you, Pankaj, for a detailed explanation about L&T and why should we buy L&T. Moving ahead to IT sector, we have been extremely bullish on IT sector for quite some time. Now, within IT sector, we like Tech Mahindra right now, considering its reasonable valuations, and we recommend buy with a target price of 1,580 rupees. So broadly, can Tech Mahindra emerge as a dark horse? That's what we try to understand in this presentation. Our our expectation is that definitely it's going to be a dark horse and it's set for a solid revenue growth. Tech Mahindra is basically a global information technology and business outsourcing services company. It's a subsidiary of Mahindra Group. Tech Mahindra's revenue growth profile and margin profile has improved significantly in the recent past, and order wins has also increased. So typically in any IT company, what needs to be seen is how is the revenue growth happening, along with that margin profile is improving or not. Thirdly, how is the order outlook, that will order wins, so that will give you future revenue projections. Yes, as I said, order wins have improved, but what is more encouraging is the deal wins in the communication segment. 60 to 70% of the communication deal have 5G deals. What does that mean? It means the scope of growth is huge. Further, deal pipeline in communications is at an all-time high, with qualified pipeline is even stronger. Tech Mahindra is on a track for double-digit growth in communication business in FY22. We expect Tech Mahindra's earnings growth to grow by 27% in FY22 and 12.4% in FY23. Return on equity is expected to be more than 21% in both the years, that is FY22 and FY23. That gives a good cushion to the shareholders. This all makes us believe that Tech Mahindra can emerge as a dark horse. On the valuation front, we have valued the stock at 20 times on September FY23 earnings. Considering the earnings growth of 27% in FY22 and 12.4% in FY23, we believe current valuations of the stock is very reasonable. We recommend buy on Tech Mahindra with a target price of 1,580 rupees. Now I pass on to Arun for his take on his stock idea.
Thank you, Sumit. From IT, we now move on to autos. In autos, we have picked Escorts as a pick. The target price we have on the stock is 1,700 rupees. Now, if you look at Escorts, they broadly are present into three different segments. One is the agri machinery, that's largely comprising of tractor sales. The second being construction equipment, and the third being the railway product business. If you look at last year, almost like 82% of the revenues came from the agri machinery business. So that's the dominant part of the business. 11% came from the construction equipment, and around 7% came from the railway equipment business. If you look at tractors, which is the key and dominant part of the business, most I mean, the tractor industry is largely pretty cyclical. If you look at historical trends, last 15, 20 years data, you'll find years when the industry would, sort of grow for 2 years, 3 years, and then you might see a a couple of years of downturn, and then again you'll see pickup in the industry. But if you look at a more current data in the past 5 years, out of the past 5 years, we have seen the tractor industry growing by for 4 years out of that. There was 1 year of degrowth between them, but otherwise the industry has grown for the past 4 years out of the last 5 years. And last year, despite a lot of challenges related to COVID, we saw the industry actually showing a very good growth, and one of the first ones to recover as soon as the economy was open. Uh, Escorts, if you look at, they have around 11-12% market share in the tractor business. Uh, in the medium term, if you look at for the industry, the growth drivers we believe there are increased mechanization, labor scarcity, higher MSPs, and also the government focus on farm income. Monsoons, if you look at, have been good for the past 2 years. For this year, the monsoons have been a bit slightly, we would say, below the past or long-term average, but we'll get a more clearer picture as towards the end of September. And apart from that, I think we also have to focus on how the distribution of monsoons have been, because there are certain areas, which are well irrigated, and these are certain areas which are highly dependent on monsoons. So that's another factor we have to look at. But anyways, the crop prices have been stable, and the good agri product output is also positive for farm income. Another thing that could sort of boost the tractor demand is also the increase in mix of commercial tractors. Now tractors is used for both agri, as some quantity is also used for the non-agri purpose as well in infrastructure related activities. So with a lot of pickup, what we are seeing in the infra side, that is a bit of positive for tractor demand. The company also had tie-up with Kubota, and they have already commenced exports to the Kubota channel also recently in recent quarters. In the other segments, if you look at the revival in economy and the government spending, should ideally be supporting the construction equipment and the railway segment business. If you look at the construction equipment business, the company's products largely includes backhoe loaders, cranes, and compactors. Now, with economic activity picking up, we are expecting huge spends on infra going forward. So I think this segment should ideally be doing well for the company, though it's a small one, but anyways, it will contribute both to the revenue as well as the bottom line. And the railway equipment business, which includes brakes, couplers, dampers. Now, these are some of the safety and comfort products that the company provides to the railways. In COVID, because of COVID, the demand, the order. New orders have been a bit weak, but once we are passed through COVID, we expect sustained and healthy growth in the railway equipment business. Now, unlike the tractor and the construction equipment, the railway equipment business is not much of a cyclical sort of business. So you can see a good sustained growth happening in this business going forward for the company. Now, in terms of margins, tractor and the railway equipment enjoys relatively higher margins as compared to the construction equipment business. So from that perspective, also recovery in railway orders would be beneficial for the company going forward. If you look at the balance sheet of the company, the balance sheet broadly is pretty strong of Escorts. They have net cash in the books. The company, even in a challenging year like last, in FY21, they generated free cash flows. The return on equity is close to around, say, 16 to 18% kind of thing, and the capital employed is in excess of 20% for the company. Now, in terms of the valuations, if you look at, the stock is trading close to 14 times on FY23 earnings, which we believe is quite reasonable. In fact, given that the company enjoys a very, very strong balance sheet, and we broadly are positive on the growth prospects of the company as well. So we like the stock, and even in valuations, they are not really very expensive. So we like Escorts, and we have a long-term buy of a target price of 1,700 on the stock. So these were the stock ideas from our side. I now hand over the call to Rini to take forward.
Thank you, Arun and team. The presentation and information on all four stocks was quite insightful. We will now open the floor for questions. All the viewers can ask their questions in the comments section below. Thank you. So, starting with the first question, what is your view on Zomato? Sumit, would you like to take this up?
Yeah. We are very bullish on Zomato, and we are recommending buy on the stock. In fact, the upside is almost 25% from current levels. We are, in our view, the fair value of the stock is 175 rupees. The rationale is simple that Zomato enjoys leadership position in the under-penetrated food delivery space. We expect Zomato revenue to grow by 55% over FY21 to 24 and 36% revenue growth CAGR over FY21 to FY30. So that gives a clear visibility about the revenue growth. Secondly, the company is improving on the cost structure, which will bring into which will bring the company into profitability by FY24. We have valued the stock on some of the parts valuation. If you look at enterprise value to sales, the stock is trading at 13 times on FY24. Broadly, what investor need to understand that why Zomato is surviving. There is a change in the society which has come. Income levels have grown, has increased, evolving taste of young generation people and their preferences, which will drive the revenue growth or greater demand for Zomato going forward. So the underlying theme is that the change in the society which is taking place and which will lead to huge growth opportunity for Zomato, and Zomato has the best technology in place to grab this opportunity. So we recommend Zomato with a fair value of 175 rupees. This is a good stock from a longer term perspective.
Thank you, Sumit. Next question is for Jatin. We saw a fantastic rally in Z today. I hold the stock currently. Should I book profit or hold the stock? Jatin, over to you.
Thank you, Reni. So on Z, definitely the couple of events that happened yesterday triggers for a valuation re-rating for the company. If you look, Invesco Optimum, the one of the largest shareholder of a Z, which has a 17.9% stake, has shot an EGM, which is probably an extraordinary general meeting, to remove three directors, including their MD and CEO, which is Mr. Puneet Goenka, and to appoint the six independent directors. We believe that this turns of events is likely to result in an end to a corporate governance issue, also lead to an improvement in the cash generation and possibility a change in management. All these developments has called for a valuation re-rating. We have raised our fair value to 250 by and also upgraded the valuation multiple to 15x. We have a buy rating on the stock, though the stock has died almost 40% today. We continue to maintain our buy stance on the stock and expect investor to continue to hold on with the positive view on the stock. As the events unfolds, we will see a sharp improvement in the company balance sheet structure as well. So Z is a buy at this point of time.
Thank you, Jatin. Next question is from the auto sector. Can you share your view on Maruti Suzuki? Arun, would you like to answer this?
Yeah, sure. For Maruti, see, right now we are seeing some pain points. Largely, that's to do with the semiconductor shortage. We already saw, you know, some production hit in August, and we're also likely to see some production hit in September as well for Maruti. So now it's not just sort of related any this problem related to Maruti. It's a global shortage of chips and semiconductors what we are seeing, and that is likely to hamper the overall the passenger vehicle industry. In fact, if you look at the passenger vehicle industry, we are actually quite positive on the growth story for passenger vehicles. The demand is actually quite strong, but there are some supply constraints which is likely to continue in the near term. And also, Maruti has been a bit weak on the SUV side. So, once the company comes out with a few products there, we believe the stocks could see some positive move. But for the time being, we believe, the stock could stay a bit under pressure, and we are really not positive on Maruti at this point in time.
Okay, thank you, Arun. Next question is from FMCG sector. Please share your views on Hindustan Unilever. Sumit, would you like to take this up? Sumit, We can't hear you.
Sorry. We are bullish on Hindustan Unilever, and we recommend stock to this stock can be added on all dips. We believe the fair value is 2,950 rupees, and though the upside is limited from this from current juncture, but over a period of time you can accumulate the stock and every on the dips because it's a structurally good company, and we believe the story to pan out is very long. So from a longer term perspective, investors can accumulate this stock.
Thank you, Sumit. Next question is for Shrikant, sir. Sir, can you share your overall market view?
Yeah, thank you, Rini. See, like the market is rallying, and it is rallying since the breakout at 16,700, and after like crossing the level of 16,700, the market has not stopped at all. It is currently quoting at 17,350, 400 levels. But if we go through with sectoral rotation and the way FIs or DIs are putting their money in the market, one thing is very clear that FIs and DIs are supporting to the market heavily, and that is why the market is not falling. So everyone is asking about why the market is not falling. The reason is because fresh investments are coming into the market. There are number of stocks, and the basket is like broadening, and that is why I think the market is finding a lot of support. At the same time, because there is a fresh entry from FIs in the market. They are looking for large cap companies like Reliance Industries, HDFC Bank. So we saw like a huge amount of buying in all these heavyweight companies, and these 30-40 companies are holding to the market, and that is where the market is not falling. So what we need to do is that we need to buy if there is any correction in the market, or to buy only those stocks which are very close to their important support areas and where there is deep upside. So in the short term, if we take the view of next, let's say, the 15 days, then we are expecting market to remain between the range of 17,600 and 17,250 on the downside. In case if we see any correction in the market, because global markets are like now finding difficulties to hold at higher levels, then in that case, the possibilities of hitting 17,000 is very high. But 17,000 is the rock solid support for the market, and there certainly we should look for adding some long position. So 17,600, 17,000 on the downside is the broader range for the market. Yeah, Ravi.
Thank you, Shrikant. Next question is for Pankaj. Can you share your views on RBL Bank and Yes Bank?
So, on banking side, if you see overall in Q1, the data showed that there is a deceleration in the deposit growth. That was 10%. I'm talking of the sector, while the loan growth continues to be sluggish at 6% due to COVID. However, the challenge is behind, and hope that there's a recovery ahead. And we are normally we are very much positive on the large size banks like SBI and ICICI. As far as Yes Bank is concerned, we do not have any coverage, but Yes Bank has moved up because of the news related to Z, which has come in today, that the Z will be restructured and it will run well. So that is positive for Yes Bank on that front. As far as RBL Bank is concerned, we have a buy rating on the bank, and we have a fair value of 225. We see upside potential of 31%.
Thank you, Pankaj. Next question is for Arun. What is your view on IRCTC?
Yeah. See, IRCTC operates in four broader business segments. If you look at that, includes the ticketing business, the second being catering in trains, the third being the packaged drinking water, and the fourth being the travel and tourism business for them. Now, the company has got good monopoly, or near monopoly, we would say, in its businesses. And IRCTC also recently announced that they'll be starting or entering into the cruise liner business. So there are some positive developments that's happening for IRCTC. Apart from them, we also believe resumption of food services in trains would be positive for going forward for them. The balance sheet, if you look for IRCTC, is actually quite strong. They don't have debts; they have got cash in their books. And they also have a relatively asset light model. So even in challenging year like FY21, they were able to generate a good amount of, or they were actually able to generate profits last year as well. Stock, if you look at, yeah, the stock has moved up in recent months. We do like the company. However, we should be looking at opportunities to enter into stock now. We all are talking about uncertainty towards third wave. So if there's any market correction happening because of third wave, or any such other opportunities comes in form of market correction, we should be looking to add the stock. We are broadly positive on IRCTC.
Thank you, Arun. Next question is for Jatin. Can you share your view on Steel Authority for long term?
So on Steel Authority, structurally we are quite positive on the steel industry because of the improvement in the operating performance and the deleverage that we have seen in the last couple of quarters. So we expect the deleverage in the industry to continue, as well as for Steel Authority of India, we expect that to come down further. We have seen EBITDA per ton picking up in first quarter of FY21. However, second quarter we might see marginal improvement in the EBITDA per ton, but post that we see a moderation in the operating performance. Having said that, we don't see any significant increase in the leverage that will happen across the industry, and the same goes for Steel Authority of India as well. We are quite positive on the company. We have a target price of 175. We continue to maintain a buy rating on the stock, and we believe that the coming couple of quarters will be a strong for the Steel Authority of India, and company will be able to further deleverage their balance sheet from the current level as well.
Sure. Thank you, Jatin. Next question is for Sumit. Please share your view on Reliance.
Broadly, if you look, Reliance Industries is a conglomerate and very diversified company. Uh, uh, Almost 33% of the revenue comes from oil and gas business, and there is a, if you look, because of the hurricane in US, a lot of refineries got shut down. As a result, Singapore benchmark refining margins have improved of late, which is quite positive for Reliance Industries. So we believe this quarter is Reliance is expected to report a decent set of numbers on the oil and gas business. Secondly, there is a quite a high chances that the oil to chemical business, where the company, Mukesh Ambani wants to sell 20% stake to Saudi Aramco. That deal is also likely to happen eventually. There are a couple of other triggers in the company in terms of integration which they are doing in the refining side, which will all boost its earnings going forward. So far, the retail segment is concerned. Company is aggressively focusing on the retail segment, which will boost its earning, and it's going to be very big in the Indian space in the retail segment. Coming to the telecom side, the company has a global vision to become one of the biggest global telecom company, and they are working on in that direction. We believe, considering these factors, Reliance has a very bright future going forward. Any dips should be used to buy Reliance from a longer term perspective.
Okay. Thank you, Sumit. Next question is for Pankaj. What is your view on SBI?
Yeah. So SBI, we are positive on the stock because even if you look at the valuation front, the stock is trading at just 1.3 times on adjusted book value. Even the last quarter result, if you look at, the company has reported 45% YY growth in earnings, uh, and even NPL ratio was largely unchanged. And the company, this is a bank which is the largest public sector bank, and so we believe that any revival in the economy or in the overall scheme of them, then SBI would be a largest beneficiary. And so we have a buy view on SBI, and we have a target price of 550. For more details, you can refer to the report which is uploaded on the website.
Thank you, Pankaj. Next question is for Arun. Do you have any recommendations in the pharma sector or do you feel it's fully priced? Arun, we can't hear you.
Yeah. So in the pharma sector, if you look at in Q1 numbers, which are largely on expected lines, However, we feel that one should be a bit more selective now, as the long-term story though remains contact, and we find the sector attractive as well. So in pharma, we prefer stocks like Cipla and Sun Pharma for the time being. Both, look at market corrections to add those stocks, and for Lupin, we believe right now we can just wait on for Lupin, because there are some of their manufacturing facilities are under US FDA scanner. So any positive or negative news flows on the plant status can impact the stock prices. But otherwise, from our coverage universe, we prefer a Cipla for the time being, and some pharma can also be added on corrections.
Thank you, Arun. Next question is again for you. Your view on Tata Motors.
Tata Motors, we have to look at two different from two different perspectives. One is the domestic business, which actually is doing pretty well. They are doing very well in the passenger vehicle segment, and they're also sort of are doing well sort of in the commercial vehicle business as well. The commercial vehicle business will ideally do well, with going forward over the course of next 2 years. We are positive. We are looking at good growth numbers in the commercial vehicle industry. But there are certain concerns for JLR. One, we already talked about the chip or semiconductor shortages, which has already impacted the company's performance in recent time. So that remains one concern area. The other concern area, what we find is, also the competition has heated up significantly in the battery EV space. So there we believe, the competitive pressure is pretty high. So right now, sort of, we will wait, and right now we are really not too optimistic on Tata Motors at current stock price. And this largely do with the concerns that we have on the JLR business.
Sure. Thank you, Arun. Next question is for Jatin. Please share your views on telecom sector and stocks to buy from the sector.
See, telecom sector, the stock which is largely we are positive is Bharti Airtel and Tata Communication. So we continue to maintain a positive view on the West, and we believe that the consolidation in the industry is likely to augur well for a company like Bharti Airtel, where we have a target price of 700, and we continue to maintain our buy rating, and that's one of the preferred bet in the space. So Bharti Airtel is the only player which we believe can be one of the key players who will be quite beneficiary on the consolidation happening in the industry.
Thank you, Jatin. Next question is for Pankaj. Your views on Bajaj Finance.
So Bajaj Finance, if you look at the company, is really it's a very good company in the space, and it's a story on the revival in the consumption. Uh, However, if you look at even the recent performance, so Bajaj, I mean, recent performance has been impacted because of the slowdown in the overall consumption and all. And we have a reduced rating on Bajaj Finance. We have a target price of 5600, as the valuation continues to be on a premium side. So it's trading at 44 times on earnings, and even on a price to book value basis, it is trading at 8.6 times. So for further detail, I would request you to refer to our website.
Thank you, Pankaj. Dear participants, thank you for your wonderful response. We will only be able to take a couple questions now. Next question is for Sumit. Your views on BPCL.
We are extremely bullish on BPCL considering multiple factors. As I just mentioned, the refining margins have improved, so that will be positive for all the refineries in India. The primary reason is the hurricane in US, where a lot of refineries got shut down, which will be quite positive for Indian refineries. Secondly, if you look the volumes of these companies are improving, and they are almost close to the pre-COVID levels. So you are getting higher margins, higher volumes. So that is positive. Moving ahead, the government has given a clear indication that they are looking to privatize this company. That means if this becomes a MNC company or any private company, then the multiples at which it is currently trading, that will get re-rated on a higher side. So there is a huge possibility of P multiple re-rating or enterprise value to EBITDA multiple re-rating happening in the stock. If you look all the baby steps which the government has taken to privatize this company, then it gives a clear indication that government is looking to divest this company or sell off this company and want to encash this. The only bottlenecks which are, according to me, is delaying the process. First is the investments in BPCL is holding a couple of investments in other listed companies, so that needs to be taken care of. Secondly, due diligence process got delayed because of the COVID thing. Now that is on track, and we can expect this to happen in this financial year itself. Investors who are holding this stock can get a dividend of 58 rupees, which is going to get ex date on 16th September. And after that, if investments in Petronet LNG and IGL also sold off, then we can expect another dividend going forward from this. So broadly, it's a story one should play from a longer term perspective. If the disinvestments or the privatization happens, then the valuation will get re-rated, earnings growth will improve drastically. That will give a clear picture to investors, and this can be compared to any private refinery like Reliance Industries, and this company can enjoy higher multiples going forward. So we remain positive on BPCL with a target price of 550 rupees. We recommend buy on the stock.
Thank you, Sumit. We will now take the last question. Last question is from pharma sector. Should I buy Cipla at current levels? Can you share your views? Arun, would you like to take this up?
Yeah, so we already sort of talked about Cipla. Yeah, we can add Cipla at current levels also on declines. We have a target of 1070 on Cipla, and the company is actually has strong anti-respiratory basket. So yeah, we broadly are positive on Cipla.
Thank you, Arun, and thank you all the viewers. We now close the floor for Q&A. I request Shrikant to give the closing comments. Shrikant, over to you.
Yeah, thank you, Rennie. See, to give closing comment means I just want to highlight on few things where investors and traders makes mistake. If we see the current trend of the market, then the market is just going up, and a lot of investors they have sold in the past. Now they are just wondering that whether it is the right price to enter or not. A lot of people they have stay sidelined because there was a valuation gap and all, but then the development and a lot of fundamental developments came and the market moved to the next level. So the right strategy is to buy. If you feel that okay, you are still holding a lot of cash and you're sitting on the cash, then please start investing even at current levels. I'm not saying that to invest fully at current levels, but start in tranches. See, if we wait, it does not mean that the market is going to come down. अगर हम रुकेंगे तो इसका मतलब ये नहीं है कि मार्केट नीचे आएगा, और जब नीचे आएगा तो कोई ऐसे रीजन से आएगा कि मार्केट में आप इन्वेस्ट नहीं कर सकोगे. और इसी वजह से हमारी राय ये है कि प्लीज स्टार्ट इन्वेस्टिंग इवन एट करंट लेवल्स, बाय इन ट्रांचेस, buy good companies, buy strong companies. Even if you go through with our webinars, then most of the time we cover large cap companies. The reason is because we cannot get stuck badly in large cap companies. If you focus on growth companies, certainly you're going to make money on your investments. Yes, there are a number of mid caps which are really doing well. They are going up and up, but for the time being, it is very difficult to analyze that whether the current multiples are rightly given to the companies or not. And if the P's, if the contraction start in the multiples, then the market can fall. But yes, you may also look for those companies, or you should focus on those companies where there is a growth, where there is a market share. और इसी वजह से हमने आज के दिन में जो स्टॉक चूज किया था वो चूज किया है एपीएल अपोलो. अगर आप देखें तो इसका जो मार्केट शेयर है, इसका जो बिजनेस है, इसका जो एबिटा पर टन है, अगर आप इन सभी चीजों पे ध्यान देते हो तो आपको एक बात पता चलेगी कि अगर मार्केट में कोई भी कितनी भी एक बैड साइकिल आए, ये इमीडिएट बेसिस पे शायद करेक्ट हो सकता है, लेकिन इवेंचुअली वापस से ऊपर आ जाएगा। हिंदुस्तान लीवर आप देखिए, या रिलायंस इंडस्ट्रीज देखिए, या इवन भारती देखिए, जहाँ पे काफी स्ट्रॉन्ग मैनेजमेंट था, और इन स्पाइट ऑफ हैविंग स्ट्रॉन्ग कॉम्पिटिशन फ्रॉम रिलायंस इंडस्ट्रीज, भारती मैनेज टू मूव टू द नेक्स्ट लेवल। सो हमें उन्हीं कंपनीज पे फोकस करना है हमारे इन्वेस्टमेंट्स के लिए, जहाँ पे हमें ग्रोथ दिखता है, जहाँ पे हमें मार्केट शेयर दिखता है, और उन कंपनीज के लिए इवन इफ यू स्टार्ट एट करंट लेवल्स, देन इट विल नॉट बी अ wrong decision for you. For traders, yes, for traders the important thing is to stop loss, keep a stop loss in place, ऑलवेज स्टॉप लॉस को फॉलो करो, और अपसाइड के लिए आप हमेशा एक टारगेट डिसाइड करके रखो, लेकिन स्टॉप लॉस इज मस्ट, स्पेशली जब मार्केट एक वन साइडेड डायरेक्शन में आ गया है। 16,000 से हम देखा है कि 17,500 तक मार्केट आ चुका है, कोई बड़ा करेक्शन आया नहीं है, लेकिन जो उसके प्रीवियस लोज है, जैसे अगर आप देखेंगे तो रिसेंट में प्रीवियस लोज क्या है, रिसेंट में प्रीवियस लोज है 17,250 के, उसके नीचे अगर मार्केट जाता है थोड़ा हमें करेक्शन देखने मिल सकता है। बट अगर एक ब्रॉड एकदम एक बड़े चार्ट पे अगर आप निफ्टी को देखते हैं कि जो मार्केट ने छोटे 16,000 के करीब होते हैं, और वहां तक अगर मार्केट जाता है तो बस मार्केट में हमें बाउंस देखने मिलेगा। तो इसी वजह से ऑलवेज ट्राई टू फोकस ऑन द स्टॉप लॉसेस, trade in few stocks, trade on a continuous basis, keep a close watch on your money management. I think then it will not be difficult for you to invest or to trade. और मैं आपको ये भी बताना चाहूँगा कि यस, इसके साथ साथ हम आने वाले दिनों में कुछ आपके लिए सेक्टर्स लाएंगे कि जहाँ पे हमें लगता है कि अभी भी अपसाइड बाकी है, काफ़ी सारे स्टॉक्स लाएंगे। सो स्टे कनेक्टेड विद अस। थैंक यू। ओवर टू रेडी।
Thank you, Shrikant. I think we can wrap up now. It was a very informative session, and I hope our participants liked this initiative and found it useful as well. For more research updates, guys, do check out our Telegram, Instagram, and Twitter channels. So, thank you, team, and all the participants for joining us today. Hope you guys have a good evening ahead. Thank you.